Hi, welcome to the Market Alert for Wednesday, the 7th of December 2016. So we saw the market put in a sell signal in the first part of the session as it waited for the factory orders to be released, and these came out just as the order was actually filled, which is around here. There you go. So 1500. You see the market touch this, and then it gets into a sideways range, and then eventually comes back and takes out the trade for a 22-point loss if you actually did this trade. It was then a buy signal, which we then see go on to actually hit the scalp and just give a little bit more, but again, very quiet session. And if you look between the two lines, you can see that we've only got about a 70-point range, and the overnight isn't much better either. And unfortunately, I suspect that this trend is going to continue until a week today, when we get Yellen's decision on what she's going to do with interest rates. And the consensus at the moment is 100% that she's going to increase the actual rate by 1/4%, which will be 0.5% for the year, when she said last year that she was going to increase it at least 6 times, which never materialized, and probably due in part to the fact that Obama had a secret meeting with her in April and said that the economy isn't going to fall apart on my watch. You can save that for Trump. Not that he was any contender at that point, but no doubt the inference, and of course he's not terribly fond of Clinton anyway. So anyway, the political aspect of that aside, he didn't want it falling apart, and so she seems to have towed the political line, although they say they're independent of any politics, which is absolute nonsense. More powerful than government, as it's the Federal Reserve is owned by private bankers, and it's not a publicly owned establishment. There are plenty of brilliant documentaries about this, and that's why there's no problem in printing the money and receiving the interest on it, but that's another story. So yesterday, you can see how narrow the range was yesterday after the activity of overnight Sunday and Monday from the no vote from the Italians on the reforms, and of course the prospect of Renzi actually resigning, which he hasn't done so yet. He's delayed this until some other piece of legislation has gone through or something else, I don't know. It doesn't really matter anymore. As we saw yesterday, we have virtual markets, and there's another article I noticed today as well. Trader exclaims markets are in an alternative universe. Well, welcome to the party, because that's precisely what we've got. We've got the Trump there, you've got the Italians there, and if you just go back to June, you've got Brexit there. So you can see how the market's brought back from any what would be considered in normal market conditions and non-rigged markets that it would be negative, but it's always turned to a positive. Certainly going to be interesting in the new year to see how the markets pan out once Trump is inaugurated on January the 20th, and also that Yellen has put up interest rates as well. So let's wait and see. A lot to look forward to, actually. There could be a lot more volatility than we could probably cope with, but we'll just have to sit it out until that actually happens. But it's always worth the wait. There's no doubt about that. That's when the profits and the rewards come for the patience. News-wise today, well, we just got the crude oil inventories as their high impact news item at 3:30, and then the JOLTS job openings, they're out at 3 p.m. So we'll see again what this does to the market within the first half an hour or so. And then finally, we've got the implied volatility down again, 10.27. The lower this goes, the better. You can see this in the chart now. And I've actually managed to create the charts for the implied volatility. I will be bringing those on stream shortly. They're a lot clearer than this one, and include the price action as well, but they're all manually created at the moment, i.e. in a spreadsheet. So again, gives a great picture though, and certainly longer term as well, but I will be bringing those on board shortly, so you can see how the correlation between the implied volatility and the underlying market actually work together, and you'll see how brilliant this is an indicator of the forecasting the market corrections and also direction. Right, that's it for today really, short and to the point, not a lot to report, and we'll just see what happens in the first half hour of trading this afternoon. Right, that's it. As ever, thanks for your support and also for watching, and I shall see you in the next one.